You'll see the building blocks of how we get from $15 to $20 trillion in market value associated with disruptive innovation now to $220 trillion in the next 5 to 10 years. So one of the biggest opportunities for wealth creation in history, we believe.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Cathie Wood shares with us her prediction for Bitcoin and gold in 2024. Cathie also tells us what she thinks about the Fed next move regarding interest rates and CPI, and why she thinks that AI is a new edge of technology. So without wasting any time, let's dive into the video.
You can see that gold is breaking out here. Is this a flight to safety? Are there things going on out there, whether it's commercial real estate in the U.S. or recessions around the world, or crackdowns in China and Russia and elsewhere? Is there a flight to safety? We don't know why the gold price is going up like this, but it is interesting to note that the metals to gold price is still near a very low level, near recessionary levels. So that's kind of interesting. Here's the Bitcoin price. Out to a new high. It did touch intraday on a couple of days that 70,000. And, we wonder how much of this is because of the ETF launches and all of the publicity and the competition among the 11 ETF issuers, and how much of this is flight to safety. After all, we heard New York Community Bank under duress has now been taken over, and there's another bank in Philadelphia. So there's no counterparty risk when it comes to Bitcoin. And so maybe that's part of why Bitcoin has shot up here. And as you know, from our research, we think this journey has miles to go. The way we think the debt is going to come down as a percent of GDP is because of the growth in GDP. We think if we're right and GDP growth after a cyclical slowdown, harder landing than most people think, if we are right and innovation takes over and we see very rapid growth, accelerated growth in GDP, then debt as a percent of GDP is likely to come down, much like you saw it doing in the late 90s. The Clinton administration is credited for really being the first administration, I think almost ever, except for post-World War II, to bring down debt as a percent of GDP. So we are not as gloomy on the fiscal policy side when it comes to debt outstanding as others, but it's because of our thoughts about innovation and how rapidly the 5 platforms, so robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life science space. Those 5 platforms we think are going to deliver outstanding growth in the years ahead and are going to move the needle for the economy.
Bitcoin begins a new week with a wobble and fresh all-time highs as BTC price volatility stays firmly in charge. The largest cryptocurrency has sealed its highest ever weekly close, but bulls continue to face stiff resistance when it comes to breaking higher. As the battle for price discovery rages, Bitcoin is caught in a familiar state of flux. Selling pressure at key psychological price levels combined with the relentless bid from the spot exchange-traded funds, ETF. Few were prepared for the scale of influence now coming from ETF buying. Even longtime bulls are reevaluating where they think BTC/UST could be in the coming years, with $1 million increasingly seen as conservative in the long term. Others conversely warn that the accelerating bull run may spark a macro BTC price top sooner than anticipated. Closer to the present, United States macro data is poised for release in what should set the tone for the Federal Reserve's upcoming decision on interest rates. With Bitcoin at a crossroads, meanwhile, miners are wasting no time in locking in profit prior to April's block subsidy halving.
So we think that we're going to have a little bit of a harder landing. And one of the things that could be reassessed is how companies harness AI. And what we think is there could be a bit of a pause for a couple of reasons. Well, first, if we do have a harder than expected landing, but maybe more important, because companies really have to do a lot of legwork to get ready to harness AI, and which means they have to integrate data from far-flung places around the world to activate AI, and they have to map out workflows in excruciating detail in order to enjoy the productivity gains that will come out of AI. And it's going to take some time. It takes us back to the early days of the internet when Cisco went through the same thing. Cisco had a brilliant move in the 3.5 years leading up to March 1994. And one of the reasons, the aha moment, the ChatGPT moment back then, was when AOL, when its email was connected to the internet for the first time. And so that was in 1993. Cisco just took off, soared 30-fold or more. And companies then, as competition started to enter the space, and there is competition entering the AI chip space, different kinds. The hyperscalers themselves are developing their own chips, AMD, Tesla. Other companies large enough to develop their own specialized chips are doing so. And so there was a bit of paralysis. And Cisco had a very significant setback, and then went on to years of very strong growth as companies got their ducks in order and started committing to this internet backbone. We think NVIDIA could be in the same position, and not taking anything from NVIDIA. All praise to Jensen Huang. Everyone knows that NVIDIA is the AI stock, and everyone has piled into it. There's been a big momentum move here. A lot of the investors that have piled in are very short term in their time horizon, investment time horizon. And if there's any little hiccup, just like there was in the fourth quarter of 2018 during the crypto winter, they will flee. So it's just that is why we get the question all the time: Are we pulling back on NVIDIA? It is simply for that reason, and yet we think NVIDIA is in one of the best positions among all companies when it comes to the AI age, which is truly a profound age.
Bitcoin market observers are waiting for one thing as the week begins: the resumption of buying by the spot ETF. Now the most successful ETF launch in history, the 9 participants have presided over a BTC price transformation that many see continuing. While reservations are visible, ETF may see waning demand and thus no longer buoy the price trajectory. So a sense of optimism among institutions now stands out. Last week, Cathie Wood, CEO of asset manager ARK Invest, said that the firm's $1 million BTC price target for 2023 had been brought forward. No platform has approved Bitcoin yet, so all of this price action has happened before they approve it, and so we haven't even begun. She said about the absence of major U.S. wirehouses such as Morgan Stanley and UBS. In a memo on March 9, crypto-native asset manager Bitwise listed major warehouses, institutional consultants, and large corporations as being next in line to add BTC exposure. Based on current trends, I'd suspect we'll see our first significant flows from these 3 groups in Q2 2024. And I think those flows will accelerate throughout the year as these investors become more comfortable with the new products. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.